Hey everybody, Rachel Michaelov here from Empire Tax Professionals. I'm the CEO of Empire Tax Professionals. I'm also a licensed enrolled agent and licensed in 50 states. And today I want to talk to you about the deadline of the 1099s. It's a really important tax deadline because you do get fines if you don't file it on time. And I've seen a lot of businesses file 1099s late and they file it incorrectly, which is one of the most common mistakes that we're also seeing businesses are making. It's truly important to file the 1099s as accurate as possible, and plus making sure that it's on time. So if you have any questions for me, let me know in the comments below. I will answer them for you as I see them. And I wanna make sure that you're 100% compliant with the IRS and your state. So today again, as I said, I will go over this, go over specific tax tips for 1099s specifically, since it's the time of year to file all 1099s. And I want to make sure that every single person and business owner is 100% compliant. That's our mission. So, as I mentioned, all 1099s are due this year, 2021. They're all due on February 1st. The reason that they're due February 1st is because January 31st is a Sunday. So most of the time, actually all the time, 1099s are due on January 31st, but because January 31st falls on a Sunday, you have an extra day because, we don't file tax forms on weekends. So make sure that you file your 1099s on February 1st. The second tip is, if you are a C Corp or an S Corp, you do not need to give a W-9 form to whoever you're, working with. So for example, we got several requests from other clients that we worked with that we need to fill out the W-9 form so they could issue us a 1099. And I clearly said, hey, business owner, we are a corporation. We do not need to fill this W-9 form out. So it's very simple for you to fill out a W-9 form, but you want to make sure that you're filling it out only if you have to. And if you're a corporation or an S Corp, you don't need to file it unless you're an LLC incorporated as an S Corp. So be really careful, and I'm going to go over that in a few seconds. Now, again, if you're an LLC and if you're taxed as an S Corp, you do need to file a W-9 form so they could give you a 1099, only because the person on the other end would not know that you're taxed as an S Corp. When you fill out the W-9, you could just Google it, W-9 2021 form. You'll see it's very easy to fill out. You would need to file the corporation name, the tax ID number, the address, and then sign it. You give it over to the employer that issued you or that paid you more than $600, and then they will issue you a 1099. Now, if you're a business owner from a corporation's perspective, you need to look at all of your bookkeeping for the entire year. Now is the perfect time for you to do that. Technically, you should be doing that on a monthly basis so you can review your numbers on a monthly basis. We've seen business owners look at their numbers at the end of the year, and then there are a lot of expenses that they did not even know about, and they were unable to make decisions every single month, such as cutting their expenses or even hiring whoever they need to so they can grow their revenues and increase their profits. Back to what I was saying, you do want to review that on an annual basis. So first things first is you want to make sure that you're reconciling your bookkeeping for the entire year, January 1st until December 31st. Now you're looking at every single individual or LLC that you paid more than $600. You have a list of them. Now, as a business owner, you would need to say, hey, please fill out this W-9 form. You can easily find that on the 2020 or 2021 IRS forms. It's very easy. Google 2021 W-9 forms and give it out to every single person that you paid $600. Now, the other question is, guys, before you work with any individual and before you work with any LLC, as a standard practice, you want them to fill out the W-9 forms before you work with them. Because now, a lot of times, you may work with a contractor last year in February or last year in March, and now you're going to need to run after them so you can collect the W-9 forms from them. And a lot of times they don't answer. A lot of times they don't respond. And now you have a problem because you can't deduct a 1099 to an individual you can't deduct the expense if you did not issue the 1099. The IRS normally won't allow it. Every single person needs to, if you paid them more than $600, you really need to issue them a 1099. So again, best practice is somebody works for you, you look at the type of entity, or as a standard practice, if they're going to be an independent contractor, give them the W-9 form. We also have a payroll packet. If you want the payroll packet, comment below. We could send it over to you. We're also going to create a W-9 video. If you want that, comment below and I'll send it to you. But as a standard practice, when we work with independent contractors, because there's so many VAs that we work with, we have them fill out a W-9 form and we see, okay, are you a single member LLC? Are you a sole proprietor? Are you a corporation? Just so we can cover our basis. And at the end of the year, we see, okay, how much did we pay this individual for the entire year? How much did we pay the second individual and this third individual? Then we calculate it for the entire year and issue 1099s, like I mentioned earlier, by February 1st. So all 1099s must be issued to all individuals by February 1st so they can file their returns. They're actually anxiously waiting for it so they can file their taxes. And if you give it to them later, then they need to amend their returns, which is going to be a problem. They don't want to amend their returns. They want to make sure that everything is filed accurately. And it becomes really frustrating when an employer doesn't accurately give the 1099s either on time or it's incorrect. And the two main reasons for that is because their bookkeeping numbers are not exact. They're estimated. We actually had a client last year who estimated his 1099s, gave it to like 10 to 15 independent contractors. I don't remember exactly what the numbers were. And now he had to amend all of them because his numbers were incorrect. We needed to do his bookkeeping for the entire year. Plus we helped him save like $17,000 in taxes because he did the bookkeeping himself. He did not deduct every single expense, such as the bank service charge, the $10 a month that Chase charged him, or, office expense of like $10, $15 that he went to Staples. Like, it's really hard to deduct and calculate every single expense from every single company. And when you really do add every single transaction, we were able to help him save so much more money and extract specific expenses from his bank statements and say, hey, let's say in this example, for confidentiality purposes, I'm just going to give you the name. Let's say Mike. Hey, Mike, did you know that you forgot to deduct all of these expenses? And he said, oh, I didn't even know they were deductible. And when you enter all of these transactions into a specific accounting software, then, you're able to count for every single expense. And the end result is you end up paying less in taxes. So it's always best to do your bookkeeping in an accounting software. You really want to make sure that every single transaction is reconciled. And then you're able to create specific reports of who you paid, which individual you paid more than $600. And when you're able to get that report, you could see, okay, fine. Now, again, these individuals, you need to issue W-9 forms. You need to make sure they come back to you and the information is accurate, because if it's inaccurate, then you will get fines. They give you a fine, I believe, of $50 for each, every single thing that's incorrect, such as if the social is wrong, there's a fine for that. If the name is wrong or if it doesn't match, the IRS may come back to you and say, hey, you issued a 1099 to company A, but the tax ID number does not match, and now you have an issue. You want to have like a due diligence where the information that they're giving you is accurate, and then when you do file a 1099, it's 100% accurate, so you don't have any back and forth with the IRS, because it is energy consuming and it is time. It's just a waste of time. Again, if you want a video on how to, fill out a W-9 form, comment below. We'll send it over to you. If you want a video on a profit and loss report, we could send that to you. And if you need help with your bookkeeping, and if you're a company, probably, I would say like $60,000 to $70,000 annually, you really want to make sure that you delegate the entire bookkeeping over to experts, because if you miss one thing, then you're probably going to overpay in taxes because it was not properly deducted. This year in 2021, the IRS changed the form 1099 miscellaneous to 1099 NEC forms. So that's just an update. I feel like the IRS, I don't know why they did that, but I guess NEC stands for non-employee compensation, which is the reason why they probably changed it. Now, one important thing is you only need to issue a 1099 to individuals who you paid $600 and above only if you paid them via check or like Zelle QuickPay. Zelle QuickPay would be considered as a check. But if you paid somebody, with a through a merchant, let's say you pay them through a credit card or you pay them through PayPal or Stripe or whatever, remember that these merchants will issue a 1099K to the individual. So you don't need to issue them a 1099 because PayPal will issue a 1099K to them. Now, if you paid an individual through family or through friends and family through PayPal, then you do need to issue a 1099 because PayPal does not give 1099s to people that you paid through friends and family. Like there's an option there. Now, if you pay them through business, they will give them a 1099K. Remember, it's all about who you paid and how you paid them. So my company's Empire Tax. Let's say I sent a Zelle QuickPay to Michelle, let's say, right? I need to issue her a 1099. Okay. Now I issued her a check, a direct check to the individual. Again, I need to issue her a 1099. Now, let's say I paid a company, I paid them through PayPal. You do not need to issue them a 1099 because it goes from Empire Tax to PayPal, and now PayPal will issue them a 1099K. Okay. Same thing with Stripe and other merchants. Now you want to make sure, double check, and you may also pay people through different methods, which makes it even more complicated. So let's say the first few months you pay them through check/QuickPay, and now the 3 months you paid them through PayPal. Now you need to know who you paid and how you paid them to make sure you're not double counting it, which is why accounting records is so important. You could pay somebody annually for $20,000 a year, and then $10,000 was through Chase QuickPay or check, and then the other $10,000 was through PayPal. So guys, bookkeeping records is crucially important. And when you amend your returns, you have a high risk of getting audited. And I'll tell you why. When you amend returns, normally you would need to mail them. And when you mail returns, the IRS is looking at the actual return and they're manually entering every single transaction into their computer system. They may question, why are you filing multiple years? Or why is there a $20,000 tax deduction that does not make sense according to the income on the tax return? They may question it. You never know what triggers an audit, but you don't want to amend returns. You would rather file a little bit later, but make sure it's 100% accurate. And the way that you know that your returns are 100% accurate is by entering every single transaction into QuickBooks and making sure that every single transaction is classified correctly. And every single, all your bank accounts, all your credit card accounts, all your Stripe, all your merchant accounts are properly classified and your QuickBooks account is set up correctly. Now, we've seen a lot of clients that, they think QuickBooks is just another, invoice software. They try to do it. I've actually had another company, a marketing agency. They did their bookkeeping themselves. And then what happens is she overstated her income by $20,000 and then by accident, double counted her expenses. And I'm like, this is not, this is wrong. And thank God at the time when she came to me, I think it was like a year ago, she did not file her return. So we were able to fix everything and then, file the returns. But if your bookkeeping is wrong, your tax returns would automatically be wrong. And that's why I always tell people, you can't really save money on taxes if you don't have your bookkeeping the right way. Okay, so you want to make sure that your bookkeeping is 100% accurate. And if your bookkeeping is 100% accurate, then your 1099s would be accurate. And then when you're looking at a solid financial system, a solid profit and loss report, you're able to see, okay, what's my gross revenue? What are the details of my expenses? What's the actual net income? And then in November, when time comes, you'll say, what can I possibly do to legally reduce my taxes or legally reduce your net income? Do you need to hire your children? Do you need to hire your parents? Do you need to rent your home to your business? Just so you can move money, which is called income shifting, move money to lower tax brackets so you can save money. You could only do that in November, you could only do that in the year that you're in. Now we're in January. You can't do that for the prior year. It's too late. You may do like retirement, but a lot of the things had to be done in the year. And this is why we offer virtual CFO services, where we do the monthly bookkeeping, where we process your payroll for you. We calculate your 1099. So I see a lot of our clients, they're watching. You don't need to do any of this. Nothing. We do it for you from A to Z. We give you your monthly reports. You look at your reports. You're able to see what's your actual net income. Then we tell you what specific strategies you're able to do in order for you to lower your taxable income legally. Should you hire your children? Should you hire your wife? Should you hire your parents? Should you put money into an IRA? And if so, how much money would you save? Should you rent your home to your business? And if so, how much? Does it make sense? Because it really needs to make sense based on your locality, where you live. You have to send out a lease. There's specific guidelines for every single strategy to make sure that you're 100% compliant. There's so many different things. And then, then how much should you pay in estimated tax payments? Estimated tax payments should really be paid every single quarter. And we're speaking to a lot of business owners for the entire year. They did no bookkeeping. And then because of that, they didn't know how much payroll they should be paying themselves. And then because of that, they don't know what their estimated tax payments should be, or how much money they should have paid. And then now they're so overwhelmed. They didn't utilize any tax planning strategies so they could reduce their liability legally. So now they're overwhelmed. They're frustrated because they don't know how much taxes they're going to pay come March or April. March 15th, corporate returns are due. April 15th, individual returns are due. They don't know what their taxable liability is. They didn't pay themselves. And if you're an S Corp, you're required to pay yourself a reasonable compensation. None of that was done. None of that. We spoke to a $3 million company this week, and their bookkeeping, they didn't even have QuickBooks set up. None of their QuickBooks was set up. Their payroll they were issuing payroll when they're the wrong entity, and they were the wrong entity, which overpaid. They overpaid in taxes by 15%, and now we're trying to help them. So it's really important to speak to an accountant at the right time. And I say normally when you're making about $5,000 or $10,000 on a monthly basis, it does make sense for you to speak to an accountant, and it makes sense for you to have a virtual CFO, which is what we do. Again, we review your entity. We see, okay, you're going to make $100,000 a year, or you're going to make $500,000 a year. What entity makes sense for you? Then we go over into your bookkeeping. Let's set up your QuickBooks account. Then we go into, we give you monthly reports. Then we process your payroll. Then at the end of the year, guess what? None of our clients need to really worry about 1099s. We do that all for them because we do the bookkeeping for them. We do it everything. All the 1099s we submit. So, because we want to do everything for the client. We want to make sure the client is not overwhelmed. It's just a lot for a business owner to do. And when we speak to business owners, they have a bookkeeper, they have a payroll service provider that acts like a robot. The bookkeeper acts like a robot too, because all they do is classify transactions, data entry, right? Then they have a year-end accountant. They act like a robot too, because what do? The bookkeeper gives the number to the accountant. The accountant does not review the numbers that the bookkeeper gave. And then they all are acting as robots, all of them. Nobody is looking at the entire financial picture, and nobody is helping the client directly. The client is really losing out because they decided, that they wanted to hire 3 people. At Empire Tax, it's actually very different. We have one company. It's one company, and we do several things under one umbrella. We have one person doing the bookkeeping for you. Now, we review the financials. We say, hey, Mark, let's say, just a name. You made $10,000 this month. Your payroll should be X amount. What do you think about that? Let's have a conversation. Let's go over your personal expenses. Does $2,000 make sense? Does $1,000 or $1,500 make sense? Does it make sense? They'll say no, yes, we'll have a discussion. Then we move forward, we process payroll and file the payroll returns, file W-2s at the end of the year, file the W-2s, W-3s at the end of the year. And then now you made a net, let's say, at $10,000 a month or whatever it is. Per quarter, you need to file your estimated tax payments. So we say, hey, Mark, again, your net income is $30,000 or your net income is $10,000. You need to pay $2,000 to the IRS and $1,000 to the state. Or do you approve that? They may say, yes, I approve that, and then we make the payment on their behalf. Or they could say, no, I don't know why I owe. Let's get on a call so we could explain your financials to you. Let's go over, how we came up with that number. Because sometimes people think that personal expenses are deductible and they're not, and that brings the income higher. So they may not understand, how come they don't have money in their account and they have a $3,000 net income. There's a discrepancy in their minds. So we explain it to them and we say, you wrote off, you paid your mortgage from your business account, but you can't deduct your mortgage from your business account. So there's so many things that involve a full service accounting firm. And if you are listening and you're watching and you have multiple people in your business and you're making $50,000, $60,000 annually and you want to grow your business, then, I don't even know if 50, 60K annually is enough. I would say at least $100,000 annually is a must. You do need a service for us because you do need a service like us, because when you have a bookkeeper, a payroll service provider, an accountant at the end of the year, you're just paying way too many people, plus you're paying additional in taxes. And you don't incorporate that because you're paying that lump sum at the end of the year. So as I was mentioning, our services, we do the monthly bookkeeping, the payroll, we file your sales tax. A lot of accountants don't file sales tax, and we do. We file your estimated tax payments every single quarter based on your specific payroll numbers. We don't estimate it. We look at your numbers, and your accountant at the end of the year can estimate it. So your payroll service provider will estimate your payroll because they're not looking at your financials. And your accountant at the end of the year is going to assume your bookkeeper did the right job. And a lot of times they don't know tax laws. How can the CPA assume that your bookkeeper did the right job? Because they are relying on you, that you did your due diligence and you hired the right person. And a lot of times you don't even know what questions to ask. You don't know how to review the bookkeeper's work until you get that letter from the IRS. We had a contractor who hired a bookkeeper, who hired a payroll service company that just processes payroll like a robot. And then at the end of the year, they gave their profit and loss report to the CPA. They prepared the returns. 2 years later, they get an IRS notice. IRS says, I want to see copies of W-2s, rent, and a few other things on the return. And then when the CPA when the CPA got that IRS notice, they're like, oh, I thought that, the bookkeeping was done correctly. The client said, didn't you review the bookkeeping? The accountant said, no, I didn't review it. I thought it was done right. And the bookkeeper reconciled the statement until December 15th. And you're supposed to reconcile the statement until December 31st. So she should have gotten the next month's statement. And she didn't. I guess she didn't know. I don't know what it is. And because of the extra 15 days, there were additional income. There was additional expenses. And now the returns need to be amended. And now he has a risk of the IRS going back to 3 years. Because if you mess up 1 year, the IRS may go back and say, oh, you probably messed up the other years. Now let's open the scope, and they're going to ask for additional information. This is what happens when you have multiple people working in your business, and you don't want that. You don't want robots working for you. You want somebody that's a solid business owner or a solid accounting firm that is looking at the entire picture from monthly financials to processing payroll based on the actual financials. Because if you're making $100,000 a month, your payroll would be different. If you're making $10,000 a month, your payroll would be different as well. And if you're an S Corp, you have a choice of taking payroll, which is taxed at 30%, because there's income tax, there's FICA, Social Security, Medicare, and then there's New York State and if you're depending on where you are. And then you're able to take money as a distribution. And a lot of people take distributions because it's a lower tax rate. But again, reasonable compensation must be calculated properly. And the way that you calculate that, it depends on your skills. It depends on, what you do, how many hours you work in the business. There's so many factors, on how we calculate the reasonable compensation and distributions. But I've seen a lot of payroll service provider take the entire net and calculate that as payroll. And that's 100% wrong. You do not want that. You don't want the entire net to be calculated as payroll because it's wrong. It's wrong. So Again, what you want to do is if you're making about $10,000 on a monthly basis, you really want to have one company that gives you monthly financials every single month, that processes payroll and educates you on what your payroll should be, then calculate and pays your estimated tax payments, then files your sales tax return so you don't need to be, like a yo-yo jumping from one company to another, then files your business returns and your individual tax returns and helps you with your notices, helps you with tax planning strategies, and so much more. And that is exactly what our virtual CFO services does. We have a dedicated accountant that helps you with the entire process, and you don't need to speak to multiple people and get frustrated. So if you have any questions, let us know, and make sure you file those 1099s as soon as possible. And a lot of times it may be, again, incorrect if you don't have your bookkeeping right. So first things first, get your bookkeeping calculated correctly. Remember who you paid, remember how you paid, and it has to be from January 1st until December 31st. Know who you paid more than $600. Any individual, anyone more than, any LLC, either it's single member or even if they're taxed as an S-Corp, you need to get a W-9 form from them. They fill it out, then you need to issue a 1099 based on the exact amount that you paid them for the entire year. If you need help with any of this, with bookkeeping, payroll, sales tax, corporate returns, individual returns, or even the monthly package that we have, the virtual CFO service package, contact us, comment below, or even message me. We have a full-time marketing assistant answering messages on my behalf. We're able to send you a calendar link. You're able to get on a call, and we will 100% help you with, again, entity selection. These are some things that accountants don't do. I spoke to a client who's a huge Tony Robbins fan, and his net income was like $180,000 net. Now, his accountant never mentioned that he should be an S-Corp. He was a single member LLC for the past 2 years, a new business, and his accountant, his CPA actually, never mentioned he should be an S-Corp. He got an IRS notice. It was, I think, $21,000, and his bookkeeping was not reconciled until the end of the year. His accountant never mentioned, oh, give me the additional statements. I don't know. Sometimes these accountants are so robotic, they don't think out of the box. It's very, very annoying. So we look at everything, and before he even paid us a penny, we gave him so much value on what his entity should be. We reviewed his bookkeeping for free. And if you want us to review your bookkeeping for free because you have a accountant or a bookkeeper in your office just doing the data entry, we would do that for you as well. So let us know if you have any questions. Comment below, and we would just give you a free consultation. Thank you guys for watching. I appreciate you, and thank you guys. Have a happy, enjoy your weekend and happy weekend. Bye guys. Thank you.